Businesses have gotten more clarity on trade as global tariffs went into effect this week, and that's helped boost CEO confidence. The Conference Board's third quarter CEO survey climbing 15 points from last quarter to 49. And while that's a big improvement, any reading under 50 shows more negative than positive responses. So what are the biggest issues now for executives? Joining me to discuss is Steve Odland, CEO of the Conference Board. He's also a CNBC contributor. Steve, great to see you. And I wonder what this means CEOs are thinking right now, because sort of the deal on the table from the White House, from the Trump White House to CEOs has been, yes, you're going to have these higher tariff costs, but we're going to make it up for you in lower regulations and lower taxes. Do these numbers suggest to you that CEOs are liking that deal now that we're in August?
Well, hi, Eamon. The CEO confidence is back to roughly neutral on a 0 to 100 scale, bouncing up from 34, which was an abysmal number last quarter. Now, that number was impacted by the big announcement of all the tariffs. Since then, we've seen the resolution of the tax bill. We've seen the resolution or some frameworks come through on large trading partners, not all, but the framework. So there's a little more clarity with CEOs here, and you're seeing that now that they're back to neutral. The costs are still a little bit in flux. They don't know what their long-term interest rates are going to be, but they do know their tax rates. They don't know exactly what their supply chain costs are going to be, but they're seeing that it may be somewhat manageable. They're passing some through. So this is what you're seeing. Their number one issue today is geopolitics. Number two is cyber, and then tariffs have slipped to number three. So we're back to what's going on in the world, and there's plenty of that, as we all know, in Russia, Ukraine, the Middle East, and the South China Sea, and everywhere else. But that's their number one, and then cyber has been a perennial favorite in terms of what are the business risks.
So I guess the question is, are CEOs looking at this and saying, yeah, we've got more clarity, but the clarity is, things are pretty bad. Costs are going to be higher. We've just been talking this hour about all the retailers posting these huge costs that they're going to have to eat on their bottom line as they pay out these tariffs. Is this a situation where, we've got clarity, but the clarity is, we're going to have to make a lot less money?
Well, what they're doing is it's in negotiations up and down the supply chain. So these costs are being spread. Some are going through to the consumers. Some are being lifted back up through the supply chain. But what we're hearing from the administration and what CEOs are reacting to is that this is a precursor to some level of tariff that's ongoing, but trade deals. And so, wait, and, the trade deals will resolve themselves. So there's a little bit of that, and that's what's gotten us to neutral here in the whole scheme of things. Interestingly, Eamon, people are not taking heads out. This is what happened when COVID hit, and we had, double-digit unemployment, and it really walloped the economy. We're seeing unemployment here at 4.2%. And CEOs are telling us we're not going to take heads out. But the question is, how are we going to make up for these cost differences? And, look, there's negotiations, of course, as I just said. There's some price increases. But they're also looking to AI as a potential big boost for productivity. So that's in the pipeline.
And then you wonder whether that is going to lead to them deciding to take heads out, as you put it. If you're one of those heads, not so reassuring. Steve, we got to go here, but I appreciate your thoughts. Really fascinating inside look at the Conference Board.